talk more about the first trading day of the year in Europe. I'm now joined in the studio by Cazenove Capital Management's Robin Griffiths. Robin, thank you so much for being on the show. All right, first day of trading in 2010.
Yeah.
What kind of advice would you give to investors? What would you plow your money into?
The rally that we've had, well, basically since October, can go a little higher for a little longer. We've got to see it in the context of the longer-term trends, though. In Western markets, after the rally we've had to date, where Europe is down 32% on where it was 10 years ago. UK is down 22% on where it was 10 years ago. The UK is better, not because our British economy is better than Europe, because it isn't. We would come out poorly on that. But because, for historic reasons, our British market is very international. Its Big Ten stocks are in Asia to a large extent. So it's that that's holding the index up.
Robin, I just have to pause there a second, because we're still seeing these spectacular live pictures from Dubai, and does look like, of course, it's a huge scene of what the Emirates are hoping to achieve in 2010. But we've had so much trouble, of course, in 2009 that a lot of analysts are concerned about what we may be getting out of the Emirates after those debt troubles for Dubai World. But you can see that spectacular fire display. Of course, our team of reporters on the ground will bring us the very latest. Robin, I wanted to ask you what impact this has on your investment portfolio, about not only the debt troubles we saw in Dubai, but we're seeing similar concerns for Greece. We're talking about Portugal, Ireland, also Spain, under quite a lot of pressure.
Yes, you've named the markets within the European area which are under pressure, and ultimately the big and the powerful parts of Europe will have to come to the aid of those weaker brethren, and I'm sure that they will. The debt problems in the Middle East, although they sound like huge sums of money, they are very contained and containable. And certainly the Western banks that are involved in the area were not caught by surprise by the recent debacle. They'd, if you like, seen it coming and were well prepared for it, and they're very happy to be banking in that region, the MENA region, Middle East, North Africa, for its excellent longer-term prospects. So I don't think there's anything bad now going to happen in the Middle East that will, if you like, rock the global boat.
All right, commodities and gold have had already quite a run in 2009.
Yes.
Is that expected to continue this year?
Yes, it is. And there's one bit there that is a little bit counterintuitive. People tend to think that gold goes up when dollar goes down. Well, now we're clearly getting a dollar rally. Does that mean you've got to sell gold? And I've done the back testing on this. There have been plenty of occasions in the past when dollar and gold rallied together, and I think we are in one of those now. So we can see a bigger dollar rally. The dollar index could get up to about 82, or even a little bit higher, and gold can still go to new all-time highs.
Robin, just talk me through your ideal portfolio. How much cash would you own at the moment? How much commodities and how much equities?
Yes. My personal position is, my biggest three positions are gold, India, and the Brazilian market. So emerging markets featuring prominently. I have a half-size position in Russia and China. China's less than India because China is linked through world trade to the Western world. So if our economy's cool, China must cool, whereas that doesn't apply to India. I would still hold a lot of cash, though, because we're going to have a tough year.
30%?
Yeah. Yes,
More,
about
30%.
that.
Robin,
yeah.
thank you so much for being on the show today.